Hey, how's it going, friends? So today I'm going to show you the several ways in which you can raise capital for your deals. Now, it's under the assumption that you want to buy a multifamily property. You're not necessarily doing the syndication, but just want to get your own chunk of the pie, your own property. So I'm JP, owner, CEO, founder, Multifamily done for you. Let's jump into it. So as always, guys, I like to use an acronym, basically just to help me remember my talking points because I don't have a teleprompter on the screen. So that's the reason behind that, just in case you're wondering. But let's jump into it. The acronym for today is PLERS, P-L-E-R-S. Let's jump into it. So if you're looking to buy a multifamily property, there are many ways you can come up with the capital, okay? I'm just gonna go straight into it, waste no time. First letter, P, partners, right? So depending on the size of the property, and how deep your pockets are, you might want to entertain getting a partner. You might have family, you might have friends, you might have the gift of gab, be able to do presentations, or you might have influence, right? You might have a social media following. You might be great at networking, whatever the case may be. If you have people within your circle that has money just burning a hole in their pockets, then it's important for you to start talking real estate. And that's one of the things I used to do, where I would go to networking events while living in New York. I would go to graduate events, Columbia University, NYU, and the topic always come up. So what do you do? And I would say real estate investing. And they start asking me questions about real estate, which means to me that they're interested. I wouldn't just straight hard sell them on, hey, enroll in this and do this. No, it would be basically, all right, cool. I host a teleconference back then. I hosted a teleconference, whatever it was, every second and fourth Tuesday of the month at 7 p.m. If you're interested, let me get your details and I'll send you a calendar invite. It was that simple. And basically I would just groom them in terms of deals that I closed on, so it proved my credibility. I would answer the questions. And so after doing this for a few weeks, not all of them, but a couple of them would say, hey, well, if you got any deals in the pipeline, let me know. I'll be interested. All right, cool. Well, how much capital? And then we start talking numbers, start presenting deals, and the multifamily magic happened, right? So partners, great source, and you can definitely negotiate the terms, etc., the correct entity, whether it's a limited partnership or syndication, all that's the attorney stuff. But basically, just to give you an idea, keep things simple here in this video, partners is a great way to get additional capital for your multifamily deals. Let's talk about L. L is similar to the partners. It's a lender, a private lender. So P is mainly for private partner. The L is for the private lender. Now, the way I differentiate the two is just basically getting a feel of what the investor wants. So let's go back to those teleconferences, right? I'm presenting deals, answering questions. Someone pulls me to the side and say, hey, I actually want to actually invest in real estate and I want to do it with you. And then I start asking them, okay, cool. Well, what's your risk tolerance? What's your level of ambition? How aggressive do you want to take this? And they might say, well, I just want a steady return. I really want my money back. I'm very focused on just protecting my capital, or I want some guarantees. If a person is talking that language, to me, they're more risk averse than someone who's a partner who really wants the upside, who really wants equity. Then I would pitch them being a lender. And I would just create a promissory note, draft it up to make sure that everyone's on the same page in terms of, you're lending X amount of money to this deal. You're going to get Y amount of interest rate. And we may negotiate it being interest only with a maturity period. And once we hit that maturity period, bam, you get your principal back. It's that simple, okay? So basically the difference between the P and the L, the private money lender, as well as, the private partner versus a private money lender, is really just to ask a question to see what they want. Someone who's saying they want upside, they want equity, they want to take the aggressive approach, partner. But let them know that you'll be the general partner, you'll be the one calling the shots. They're just limited partner, limited to their capital invested. But if they're on the opposite end, where they're focusing on security, safety, guarantees, want something slow and steady, lender all day long. All right, let's get into the next letter. The next letter is the E. Equity in their home, in su casa, right? If they have, this could be you. You might say, hey, I'm gonna have that network, or I'm gonna have that gift of gab. That's cool. But I have other assets, JP. The home that I live in. The home that I live in, it may be free and clear, or I bought it, who knows, 10 years ago. This neighborhood is on the rise. Appreciation just went through the roof. And I got tons of equity. Man, I can do a refinance today, or I already got a home equity line in the works, or I already got a refinance, cash out from investment property. I got the cash. Then cool. Make sure that you talk to your lender, get all the specifics outlined, and pull the trigger. Get the equity from your home or other assets that you might have. You might have stocks or bonds like the grew in appreciation. You might have businesses. So whatever asset in which the value is greater than the debt service associated with it, talk to your lender and pull that equity out. And I know I'm saying, houses, because that's very common, but you can have many other assets and do the same concept. So equity, all right? The next letter is the R, which is retirement accounts, okay? You might have a 401k, a IRA, or some other sort of investment account. You might have life insurance. Okay, we can throw that in there, which even myself, I've used that to acquire properties. I would say just look at your other assets in which you have cash is sitting there, gaining interest, and just see, not saying you have to cash it out, but get a loan against it. When I was an employee, I had a TSP loan through a savings plan loan with the government, and they let me borrow against my retirement account in two ways. One was a loan for residential purposes, so they allowed that. So if you were going to pull out money from your home, from your TSP, your retirement plan, to buy a home or investment property, no problem, okay? And I made sure that I was still making a positive interest for the money sitting there versus the loan amount. Meaning, like, let's say I'm getting a 6% return, but my loan was 4%. That's a win. I'm still making 2% extra, okay? All right, so that's retirement. And last and simple and super easy is S, which is savings, right? You got the money sitting there in a money market account, CD, you have the money sitting in a standard savings account, or even a checking account. The interest you're getting is minimal, you know it. Sure, it's safe, but hey, why not put that money into a property that gives you a higher dividend, AKA cash flow, each and every month? Now, it's a bonus. You can also do some creative things, right? You get the capital. You can negotiate with the seller, get seller financing. That's always great. You can also negotiate to do the deal differently, like a lease option. That's also great. You can also do wraparound mortgages. There are many other creative financing tools, or even outside of just how you structure the deal financially. Many people use tools like business credit. There are many ways to fund your deal, but what you got to focus on is just making sure that you get the capital ready and you take action. So if you're ready to take action, then do so today. Book a discovery call with my team, so that way we can ascertain your goals, see if we're a good fit for you, you're a good fit for us, and we can make the multifamily magic happen. But hey, you don't have to do anything I share in this video. All I say is this: just keep coming back, keep viewing our videos or content, so that way you become more of an informed decision maker, and it builds you that confidence finally to take some action. As always, guys, it's to your success. Continue to earn passively and live passionately. Peace.